All right, perfect. All right, so welcome everyone. This is the High Performance Trader Weekly Recap, right? And we got a really special lesson today, right? Where we're going to be basically breaking down what our edge is and like what it represents, right? Because we all trade supply and demand, right? We're going to be breaking down what that really means, right? We're going to be breaking down how to identify it in the charts, how to visually see it, and why it's beneficial, right? So basically going over the overall market context. And then what we're going to do with that information is then run through the week and how it made us money, right? And how we plan to trade the following week, right? So really good stuff, right? Because it's one thing, right? Like, especially when I first learned, right? Like what supply and demand was, right? When I first started doing it, it was nothing more to me than just a bunch of rectangles, right? And I was like, oh, I draw, these are zones, right? These are zones, but like, what really is a zone? And basically, what it is a it's a prior area. It's a volatile area. We're looking to identify a potential move, right? Like an area where we're looking for a specific seller or buyer to step back into the market, right? So
Yep.
I
Areas of value,
yes,
areas of interest.
yes, like prior, and we always talk about that prior price movement. So what I want to do here, right, is so I basically freed up my chart a lot. So basically how I want to start this off, right, is we've been in every single day I get an overall idea of the market context on the daily time frame, right? So over here we got the daily time frame, right? This is the S&P 500 SPY, the ETF, and we got a high over here of 462.07, right? So how I would start this, right, is by obviously drawing a red rectangle, right? So this area, what I'm doing here is identifying an area of value where if price can ever come back to $462, I'll be looking to take the market short. Or I'll be looking to spot that same seller that violently brought price all the way down to 348. Right? So it's basically like this is an area of interest and volume and potentially where we can make money, right? And then I will just move my way down and go, hey, this spot also had a big sell off, right? So it's pretty basic, but I just want to run through it. So we also got and one way to do this, guys, right? So after you draw your rectangle, you can right click, duplicate, and then look, you literally have another one, right? So if you're like trying to do it fastly, it works really well that way. So on and so forth, right? So we're just moving our way down, and you do the same thing for demand. So obviously down here we have a very large green candlestick, right? Where buyers stepped in with volume. And what I love about supply and demand though is it doesn't matter which time frame. It could be the daily, it could be the 1 minute, it could be the 5 minute, right? But we really like to identify these on larger time frames because they hold much more weight, like much more influence, right? Obviously, a supply and demand zone on a larger time frame is going to be much stronger than on the 1 minute, right? So really, really important to identify these and start your week, your day off, or any trade off on the daily time frame, right? So basically, we've identified that we're in a downtrend, right? This is a downtrend market. We're making lower lows, right? And now we've identified multiple supply zones, right? So then you'll dive in a little deeper, and you can see I got this resistance line right here, right? And the reason I plotted this here is as long as price is kind of below this resistance, right, I'm looking, for potential shorts, right? And you could see how that played in effect right here on, let me see, which day was this? This was on 2/2. So you can see this huge sell-off, right? So that's telling us there's a massive seller right here just unleashing shares, right? Huge red candle, once again, daily time frame. So on this day when we ripped back into this 417 area, right, it was met with selling and has rejected ever since, right? So that's a clear example of a supply rejection, right? That is a supply zone being rejected. Very, powerful stuff, right? So that's kind of how I take the temperature of the market, right? So now going into, and then you just work your way down, right? So now we bump into the 4 hour, right? So this is what the 4 hour looks like. Obviously, price ripped into here multiple times, could not make a higher high, right? And that's very important because we're gonna, and when we break into like the 1 minute, you'll see why that's so important. But so price basically will rip into this area, right, of value and reject, right? And a lot of people ask me, right, like how do you know how big to draw your supply zone? And my point that I want to get across is it's not really all about getting the perfect supply zone. It's about getting an area of value where you're trying to identify a seller, right? So you just want price to come into this area. And then once you spot sellers with volume, right, with a chart pattern, with volume, right, that's kind of how I identify the move, right? And we'll get a little deeper on that when we get into like the 5 minute time frame. But one thing I want
it's important. I think it is important. Yeah, I think it's important to stress that it's not a specific dollar amount.
Yeah,
like
right.
Everybody, you might have your own way of drawing your zones, but you just have to get used to your own way.
Exactly.
And also just don't get attached to a specific dollar amount. Just be ready to watch the market's moves as it gets into these zones.
Absolutely.
And definitely don't just pull the trigger as soon as you enter a zone.
And that's really the point I want to get across is, right, like we have these zones, and just because we fall into these zones, right, like you can see right here, buyers showed up over here at this 403, right? So on this day, this was 210, right? So price comes down right into this 404 area, right, which we know is a demand zone because we got a violent move. And we can also say that about right here. We can also say that about right here, right? And we can also say it about right here. So these are areas where we're looking for buyers to show up. So basically, the goal here is to capture moves in between the market and balance, right? So obviously sellers are strong here. Obviously buyers are strong here. Right. So what's really important about these zones is that just because we've identified them doesn't mean you hop in, like, it doesn't mean it's going to work perfectly. You know what I mean? Price is going to come down and be retested. And just because it's a zone doesn't mean buyers are going to show up. And you can see that right here. But what I really want to break into is how a demand zone will then turn to a supply zone, because we've seen that a lot this week. And being able to, you know what I mean? And being able to identify that is extremely important, right? So you can see here on this zone, right? So buyers came in right here and sellers just overpowered it with strength, right? And then you can see right here on 223, price ripped right into it, right? And we'll break into the 1 hour so it's a little easier to see. So price ripped right into it right here, because this now turns to supply, and price rips into it and rejects, right? So really, and this happens consistently, where a demand zone, right, where buyers show up, then turns to a supply zone where sellers take control. And we've seen that happen a lot of times here, and it's just really important to be able to identify these areas as nothing more than areas of interest, right? These are areas we're looking to take markets short or long. That's it, right? They're very important because obviously that's where we make most of our moves. But just because buyers came in right here at 404.18 doesn't mean it's going to be on the exact penny, right? Actually, there's a pretty high chance it won't. So just get used to identifying your areas and remembering our overall edge is to identify smart money, because we cannot move the market, right? We can't control if it goes up or down, right? So with that being said, right, all we can control is be able to spot it, right, and then make money off it by identifying it and then capturing the move, right? So just really important stuff right there. All right.
Yeah, also looking at the probabilities of these zones. I know you
Mm-hmm.
chart them all
Yeah.
in the T metrics, but like if you look at supply rejection and you look at demand rejection, you need to know they're not 100% of the time.
Yes.
And it is completely possible for price to enter these zones and then to blast right through it.
Yep.
And you need to be ready to accept that this zone is not holding. Obviously, there's things which will tell you, there'll probably be hints to tell you that a zone is strong or a zone is weak. And you have to take that into account and also accept when a zone is just being completely invalidated.
Yeah. Well, and Mark Douglas, right? He says this perfect. So he referenced it to back in the day when he used to trade in the pits of Wall Street, right? So basically, sometimes smart, I mean, these large buyers just don't show up. So I want you guys to think about it like this. If you're looking like let's put it right here. Let's find an example. So this is actually a perfect example. So say you're looking to go long right here on at 404, right? Buyers showed up right here, and then buyers showed up right here as well. So say you're a futures trader and you're trading pre-market, and you go, hey, I'm looking for a buyer to show up, and once we come into 404, I'm going long, and obviously we sell right through it, right? What happened here is that nobody hit the bid. So if you're in that pit in the future, if you're trading futures in the pit of Wall Street, you're not going to go long unless you see the guy with 10 million or $100 million buy 1,000 shares, right? Like it doesn't make sense, right? So since we're not in the pits of Wall Street and we can't see what other people are doing, right? We're not psychics. The way we validate our chart pattern and our opportunity is with volume, right? So we'll see the large money step in with volume, right? That way we know they've stepped in, and then we can capture the move. And then once these zones aren't respected, they become key levels of resistance, right? And then, so it's really important to, like Darren said, when they turn invalid, right? Now you completely switch up your context, right? And now you're looking for different types of trades, right? So. And because you know what I mean? Because these chart patterns are nothing but human behavior, right? And I remember when I first started trading, right? I was like, oh, technical analysis, all these lines, they predict the future. I actually used to say that. I'd be like, technical analysis predicts the future, right? And then my trading, I would just lose trades and I would fail miserably. And then once I started to realize that these, technical analysis, they don't predict the future. They just give you information. Like when a trend line breaks, that's telling you it's getting weaker, right? So there's these specific patterns that represent human behavior, right? All the double top is every time price comes into 407, it sells off, right? There's a big seller here that likes that price. He's got 100 million shares he wants to get rid of, and he may have sold 50 million right here, and now he wants to sell the other 50 million right here, right? So that's really all that a chart pattern is. And once you can understand that, right? So say you go long, or say you go short right here and price rips and rallies, all what that means is that seller did not show back up, and it's much easier to cut your losses then. You know what I mean? Which is very important.
That's what's helped me a lot. When I see price coming into my zones that I got marked out,
yep,
my eyes immediately go to the volume pressure.
Yes.
And then of course I'm looking for top and tail bars or an engulfing bar.
Yep.
But mainly my eyes go straight to the volume.
Yep.
And that'll tell you, almost like give you a cheat sheet what to do, which way to go.
Exactly.
And if nothing shows up, you say it's supposed to reject here, and you see a bunch of buying volume. Well, I'm doing the opposite.
Right. So 100%. So like Friday, this is Friday right here. Yeah. So this was Friday, right? And we went long. Well, I went long right here on Friday, right? And I'm just gonna tell you guys why. So the reason I went long, right? Price was selling off. I actually went long on QQQ. Let me just pull that up real quick. So this was a prime example, right? And I just did a video on this on YouTube. But look at this volume, right? So price comes down, is just immediately sell off, right? There's a large seller. Then you get this volume, right? So once we started to come next to the zone I had plotted out, right? And look, I didn't even hit my zone, and that's okay. That's completely fine, because what this zone is doing is just highlighting a specific area that I'm looking for buyers. So if I get by, it's kind of a double-edged sword, because obviously you need your zones pretty close, right? But what I'm trying to go over here is the importance of the volume aspect, right? That Todd just said. So price comes down, and this is when your ability to analyze the candles comes in handy, right? So as price comes down, you get volume, right? And even though volume's here, you can act on that. That's okay, right? But if you want a little more confirmation, and price comes down, cannot make a lower low, right? You see here the low on this candle was 289.11, and then sellers took her back down to 289.18. Could not make a lower low. You get the basing candle. This is a clear indicator to take the market long, right? And this right here will work 8 out of 10, but that's still not 100%. You know what I'm saying? So, and that's the game. That's okay. You know what I mean? If you trade with proper risk management, you could be you could probably be 3 out of 10 with your win ratio. If you can cut your losers quick and let your runners run, right? But that's a whole different lesson and topic. But I just really want to stress the importance of being able to identify that large money, and this is a key indicator, right? And then price obviously, rips up to pre-market high, or pretty close, and that's the importance of the market imbalance, right? So now that we've identified the entry, right, the next move is to identify the exit, right? Because you can't just blindly hop into trades, and obviously you need to identify your stop loss as well, right? And that pretty much comes down to where does price need to go for your setup to be proven invalid. And in this case, if price now makes a lower low, that's probably a good indicator to get out, right? Cut it quick. You can always re-enter. It's better to have a small loser, right, than a large one, and you just don't want to make yourself vulnerable. You know what I mean? But then, yeah, perfect rip. I love to target end of day, right? You could see there's always a battle around end of day. Price rips right in the end of day, rejects, and then breaks through it, and then played another vital role. We called this out in the Discord as well, right? Because a price then broke end of day, and that's why in the course too, I break this down. End of day is also an area of value. It is just like a supplier demand zone because it has value, right? You can expect the end price, right? Whatever yesterday's closing price was, you can expect there to be volume in this area, right? You can see right here. Look at the volume cook right up here. Once we touched end of day, right? Tons of volume, meaning a lot of liquidity here, a lot of smart money here, and then again, tons of volume. Price sells off, and sold off insanely, right? And VWAP as well. VWAP is also an area of value, right? And that's why in the T metrics area on the Discord, right, we got supply rejection, demand rejection, end of day rejection, VWAP rejection, and these are really all what I look to trade, right? I think me and Todd, me and Derek, I think we talked about. I mean, we really only have like 5-6 different setups, and that's all you really need, right? Like, keep it simple.
Yeah, if you start drawing out these zones, and you just, even if you just practice drawing zones and look how many times throughout the week price enters your zone and makes a reversal, you will amaze yourself. At and you'll think for the next day, man, if only I could just make a move in that zone, and that's literally all you have to do. Obviously, there's going to be things which try to make you jump in too early or second guess yourself, but I mean, you'll prove to yourself by drawing these zones how accurate they are, and you'll get better at it, and soon you will be able to make your pre-market analysis with these zones, and then just trust the zones and then update your probabilities.
Right.
demand, maybe for this month, demand rejection is only 70%.
Yep.
Maybe next month it's going to be 90%. But
Yep.
you got to know that stuff in real time and know how to update your strategy for how well each of these zones is acting.
Yeah, absolutely. And I know we talked recently, Darren, about the ability to be real fluid, right, with your zones, right? So basically, what used to be a demand zone right here. I mean, one more example of this, because the break and retest is very, very important in strategy, right? So we got here, which was demand, right? So this right here was a supply zone that buyers created into demand, right? And we opened above, right? So this was an area of value, right, that we were looking for buyers. Buyers stepped in, and then you can see, right, we broke through it. So in the pre-market analysis, this was a very important level for me, right? And notice how I'm kind of moving it, right? So what started right here, right? And then when pre-market analysis comes, I go, oh, wow, look, we used to have demand right here at 294.93, right? I'm going to make that touch that. And now, because now that we're opening below this area, right? We are opening below this area. Oh, that didn't work the way I wanted it to. So pre-market, we're opening below demand. I'm looking for price to retest this area and become supply. And that's exactly, that's what happens. So these areas of value, once they're not respected, that doesn't mean they're not valuable, right? They still stay with a lot of value, and it's really important. So like going forward with a pre-market analysis, you leave your zones on there, right? So basically, I mean, a lot can change from now till Monday, but I tell you what, I'll be looking at this zone that we're in, right? Obviously, us respecting it. And another really important thing that we've talked about is you need to be able to identify these on the S&P 500 and on the QQQ or the NASDAQ. It's very important because both play a vital role in price action, and zones on the QQQ may be respected when zones on the SPY won't, right? So just really important to understand that and know that every single day I am looking at both, right? They both play a very
good example. A good example of that is Monday of this week. I think it's a good idea to go over, and I'm on the 15 or 30 minute.
So that was March 6th.
Yep, it was the top of that head and shoulders.
Oh yeah, right here.
Yep. And what's crazy is I think SPY just touched that zone, and QQQ actually went through that zone, but it had its own indicator on why it was going to make a reversal there.
Right.
And they're kind of two different setups. So yeah, this is QQQ.
Yep.
So you can see it kind of did. It bounced off it right there. Right?
Yep.
I think it's back on.
Oh, right here. Yep.
216.
216.
216. It bounced on top of that zone, then broke below it.
Yep.
And then came up and touched the bottom of that zone. So that's a break and retest.
Yes. And
then on SPY, it bounced off of that zone.
Right. Hold on. Let me see. Yep.
And SPY. I guess it did the same thing, close to the same thing.
Yeah, and they both, and one thing I was looking at this day, right? Let me see. Oh, so this was this day. Okay, so this day was actually really okay. So this is really important to go over, right? Because I actually went long this day and captured a move up into supply, right? So let's break this down real quick. Let me just make this 15-minute time frame. We're gonna make this 10 days, 15-minute. Okay, so what I want to do here is get rid of the pre-market data real quick and show you why I went long, right? So
where we at, Monday?
Yeah, so this is Monday 2/16 or 3/16.
Yeah, gotcha.
So what I've been doing, right, is if price can open above yesterday's highs, right? And this has been working really well for me. So here's yesterday's highs right here, right? 404.45, right? So what I'm doing here is looking for price to come down, right? And respect this area, right? Let me see if I can do it on the 5 minute. It'll work a little better than the 15. So 10 days, let me do 5 minute. Okay, here we go. Okay. Oh man, perfect. So my goal here, if we can open above yesterday's highs, I'm looking to come down, retest this area of value, right? And go long, right? So we come down, we touch it, buyers show up, and we hold above VWAP, right? So in this case, I'm going long here, right? And until we make a lower low, I'm in my trade, right? And you can see here we weren't able to make a lower low, and we went right into 407.45, right? Almost a $3 move, right? And then once we hit this, though, this triple top, look at this. Oh my God, this was amazing, right? So I love seeing this because this right here is our edge, right? Area of value, right? 407.45. Triple top, right? Look, with volume, right? And this is what trend lines are used for, right? To indicate weakness or strength. So we get 1 hit, 2 hit, 3 hit, and then big red candle, right? Then we break the trend line, right? And I remember putting this in the Discord, right? When we break trend, go short or whatever you felt comfortable with. Some traders took it short immediately, which is fine. Some traders waited. Shout out to the traders that took it short up here, because when price could not make a higher high, that is a clear indicator that sellers are strong, that smart money has stepped up into the equation, right? And then price comes down and look, retouches yesterday's highs where there is still some buyers, right? You get this reject, and then sellers take over, right? So
Josh, do you want to go back and kind of go over where that red zone came from? Because if we hadn't identified that red zone at 407.50, I mean, we would have been a lot less likely to
take the trade,
actually trust that short.
Absolutely. Yeah. So you can see where we got this area, right? Let me just I'm gonna throw the pre-market data back on, because anytime I'm identifying areas of value, I leave the data on. So this 407.41 area, right? This supply zone that caused this massive sell-off. Where we got that from was this old demand zone, right? So this used to be demand, right? This day back here, buyers used to come in and buy all the time, right? This was a well-respected demand zone last week for all the traders that were on the Discord, right? Well, you guys remember we were going long here, right? Look at 1, 2, 3 times buyers showed up, and immediately the next day, right? I remember shorting this day when price opened below the lows, right? This then turned to supply, right? So you could see perfect.
The ceiling.
Yes, look at that. Ripped into it, rejected, and buyers tried very hard, right? And then overnight gaps down, right?
Big sell-off. Big sell-off after that. So that's the last place we know where there is a balanced market.
Right.
That's the last place we know where buyers and sellers agree on a price.
Exactly.
And so that's where we look to make moves from. And you can see, I mean, look how that was like 2 weeks. That was over 2 weeks ago. And look what happened when we re-entered that zone.
Sold.
Triple top and sold off.
Yeah. And now look at how much. So that's on a very large time frame, right? Now look, we go into a smaller time frame, we break it, retest. There's definitely a buyer right here, right? Because buyers really push price up from $4 right here. And then we break below it, retest it, and continue to sell off. This is why when we identify market context, right? This is why it's so important, right? To go short in a downtrending market, because supply zones are obviously much stronger. Now, that doesn't mean you cannot go long, right? Because I mean the market's been trending down, and I went long this day, right? But I do for a lot of traders that are getting used to supply and demand, I really recommend, right, going short when the market's in a downtrend, right? But at the same time, don't let it handicap you. If you see buyers showing up in a demand zone, go long, right? It's just remember our whole goal here is just to identify smart money. If we can identify large money and what they're doing, we will be wealthy, right? We will do amazing, right? So yeah, that's a really good example right there, Darren. Yeah, absolutely. And then obviously you get this massive head and shoulders. But honestly, I was looking to go long on this day. I didn't because let's check out the 1 minute. So this day was because I want to see how this played out. I mean,
I think there was a Fed speech at 10 o'clock that day.
Yes. So when I say I was looking to go long, what I mean by that is I was looking for a demand zone for buyers to show up. That's it. We also, and that's why we every single day in the Discord we put out a bullish and bearish scenario, right? Because it does not matter, right? Actually, hold on. Yeah, this day we did not trade the morning because the volume was so low. I remember that. It was the morning, the volume was super low. And the reason why, right? We posted, there was an announcement there was going to be a crazy, Powell speech, right? And then, bam, market sold off heavy, right? And wow, hold on, let me see what happened here. And it's really cool to always go back, and every time you see a violent move, be like, well, where'd that come from? Oh, right here. Hold on, let me see.
Oh yeah, man.
Isn't that crazy? You can start to see it when you look enough. You'll once you learn supply and demand, you can identify it anywhere, right? So
yeah, that was I took that short on the fibs. The fibs killed that trade.
Oh yeah, yes, the Fibonacci's.
Yeah, the fibs nailed it to the T.
Yeah,
that's how when I took that short.
Yeah, those Fibonacci's work very well too. Let me see where we at. Right here.
Mm-hmm.
Yeah, so I mean, price falls down, rejects perfectly. And even, and we got this little demand zone here. And I just want to go back to being able to identify smart money, because even with a massive sell-off, right? Look at this. We get huge volume, right? We get large move, come down, retest, cannot make a lower low. I took this long to VWAP. And this is why, because when you get these large moves out of a demand zone, even if you don't have the demand zone there, right? This is a clear candlestick analysis. When price comes down, rejects, cannot make a lower low, right? And then once you break above this, right? This is one of my favorite moves right here. Once you break above this, you don't just go long. You wait for price to come down, break and retest, right? Rip, break this resistance, come down, retest. These candle wicks right here are telling you buyers are strong and they have stepped up, right? And then then you capture a quick $1.50 move or $1 move, $2 move in the VWAP, right? Like, and that's really all you got.
I shorted that move right there. You got it right there.
Oh, did you?
Yeah.
Yeah.
Yeah, right at the above VWAP. That's where I shorted right there.
Oh yeah, so you did the Fibonacci's.
Yeah, from there, yeah.
Let's see. So this comes here. Yeah, look at that. Perfect.
So, yeah, that's what I took.
I think the QQQ even went just about all the way up to end of day. I think
that's what happened.
I think he even touched the end of day, and that was that's where I went short as well.
That's yeah, right here. Look. Oh, this is perfect. Yes. So look at this, dude. This is perfect. So
yep.
Market open, another very valuable area of value, right? And I think this actually was end of day as well. Let's see.
Yeah, it was.
So end of day. Oh yeah. Okay. So end of day was right here.
End of day is 300 exactly.
Yeah. So there's end of day. Now for everybody, just so they know, end of day is whatever the price is at the end of the day, right? Pretty, self-explanatory. So now, look at that. Look at that.
Oh, perfect.
Look at that, man.
Just kissed it. Money.
Yep. Money shot. Sniper.
Money.
And then look at the volume. Volume, candlestick rejection, right? So this is why every single day we are looking for these areas of value. End of day, supply, demand, pre-market high, pre-market low, VWAP. Those areas every single day will make you money. It is extremely important. You can see right here, very, very perfect analogy, right? Price rips right in, rejects, and capture a nasty move down to the downside, right? Look at that.
Yeah, that's also the importance. That's also the importance of looking at SPY and QQQ at the same time. Because we just looked at SPY, and SPY didn't make it anywhere close to end of day,
right?
Or it didn't even make it anywhere close to market open. And if you're just looking at SPY and not looking at QQQ, you would have been waiting and waiting and waiting, and you would have missed this move.
Yes, absolutely.
So this is the importance of having both of these charts pulled
just
up at
like
the same
this.
time.
Yep.
Even futures, even the futures on NQ and ES, that will also help you.
Yeah. Exactly.
That's what I trade. I trade with a SPY chart on one screen and my futures charts on the other, and that's the only way I trade.
Yeah,
exactly what I do too.
And that's why this is exactly how I look at it. You got both open, and you're just trying to spot these moves, right? And another thing I want to touch on though, real quick, the importance of supply and demand is right here. Say you missed this move, which is completely fine, right? Say price rips. I mean, it literally was 3 minutes, so I wouldn't. I completely get if you missed this move. But say price rips up in here in the end of day, right? We get this sell-off. A violent sell-off is a supply zone. So we can identify this area as supply. There is a large seller right here, right? That's all. That's what supply is. Nothing other than a large seller. So now price rips right back into it, right? Rejects. And then even if you miss this move, when price then comes and tries to do it again and can't even make it up there, you now make a lower low, right? That is a clear indicator that the market is now weak. Sellers stepped up here, and now they're really coming in. You know what I mean? So, and again, what I'm trying to do here is help everybody just look at this as a market auction. It is extremely important to identify this as a market auction. Nothing else. That is all it is. All what we are doing is looking at the auction between buyers and sellers, and we are just trying to make money in between, right? That's literally the name of the game. There is nothing else. It's very important to understand what your edge represents, and that right there is it, right? Clear supply zone, chart pattern, in an area of value, high probability market reversal. So anytime you hear us, this is a high quality setup, that's what we're talking about. Anytime we're talking about being patient, we're talking about waiting for this, right? We're, very important to understand that, right? And, and obviously hindsight is very easy. But as long as you can identify areas of value, right, and hold yourself accountable to being patient, to trading only your areas of value and only your chart patterns in those areas, you'll kill it. You'll make tons of money. This day was amazing.
And the other thing about that zone though is you didn't just draw that zone and then forget about it. Price left that day lower than that zone. So the next time we come back into that zone, we're going to be looking to go short. And if you look on QQQ, that literally happened. That literally happened on Thursday. But that zone that you just mentioned, the next time we came back into it, that end of day level, 300.
Yep.
Look what happened.
Yeah. Look, this one right here. Yep.
See? Yeah. So So those zones, they stay there. They keep acting. They keep acting as supply until we break through them, and then they become demand.
Look at that to the T. That 300 level, super psychological level, right? We went short this day too.
Yep.
So rips into your old pre-market high, right? Over here, rips into it, sells off, buyers try, right? Which this was a valid move. I went long this day too, because you bounce off yesterday's highs. This was a very awesome day right here.
That's exactly what I did.
Yep.
This is a good example of when you can go long in a downtrending market, but you just need to have your expectations in check.
Yeah.
If you didn't know that supply zone was there, you might have waited and missed your move,
So I want to take pre-market data off for this one. So this is what it looked like. So you had yesterday's highs. Actually, let me break out the 1 minute because this day was powerful.
Oh, that's great. This is a great trade right here.
Yeah. This day was really good. So look at this. So the importance of yesterday's highs, and when you get rid of the pre-market data, this works very well. So you can see right here you have 298.43, right? That is your high, right? The market opens right here, right? It looks something like this. Market opens, sellers bring it down, right? And you get a Basin candle out of an area of value, right? Just like that.
Money moves.
Dude, that right there is a clear indicator to take the market long, targeting supply, right? Perfect VWAP rejection, holds VWAP. And this is why it's so important to learn to identify. Look, you even get abnormal volume, right? You get higher volume right here. This is what candlestick analysis is all about. It's all about letting the candles tell you the story, right? Exactly what's going on. And this is what's going on right here. Price comes down, rejects, right? And then makes a move way up to 300. And then you really don't need to get out of this trade until you're told to. And, and that's the market telling you right there. Supply rejection. End of day, the old end of day, that 300 level, super psychological level. You get a break, retest, falls down to yesterday's highs. So, and what this is telling you is buyers are still here. Maybe not as many, right? And then you get a break, retest, sell off. Look at that.
Yeah, and that's what I've been doing. That's what I was talking to you about the other day, Josh. On the when you got the pre-market data turned off,
and
then you going into the open and it say it's up. What I started doing to help me a lot is I fill that gap in with that color bar, like to the upside, or to the downside. I kind of make my own bar,
right? So it
makes you look at it different.
Yeah, right. So what you're saying is this is a big green bar, right? You got a big green because that's literally what it is. I
filled that in with like one bar.
Yep, and then that would be a perfect ABCD continuation setup, right? You got the A, B, C, D, right? So A, B, C, D. Yeah. So and just think about it. Hey, this used to be resistance. You're now opening above it, so now it is support. Take the market long, make your money, right? And then it's just and once again, guys, this is nothing but candlestick analysis. You do not need any RSI, MACD. Actually, do not ever use those because those will make you biased, right? Oh, the RSI is at 30. I'm looking for buyers. That does not mean anything. All it means that the stock has been pummeled, and it actually probably means the exact opposite, right? So, it just the main goal is to identify in live time where the smart money is. You do that, and you will have a lot more higher of a chance to become successful, right? So, just really.
And I just want to mention something for new traders that may be looking at these zones and thinking like that looks too easy, or how can I guarantee that this is going to work for me every time? And the thing is, you definitely cannot guarantee that it's going to work, but you cannot start building your edge until you start acting on your intuition and start building. You can't build your edge unless you act. And if you act and you're wrong, that means you're updating your edge.
Yes.
And you need to journal that, and you need to take that into consideration on your next trade.
Yep.
And then over time, as you keep acting and you get better and you drop your losing habits and you start building on your winning habits, you're going to refine your edge over time. And this stuff, we talk about taking these break and retests, and we're making moves in the first 5 to 10 minutes of the market open. We are just acting on the edge that we have built.
Yes.
And it makes sense that if you're starting out new, you don't have an edge, so you just have to start acting and then refining that edge.
Yes.
And the only way you can do that is by putting risk on the table and defining how much you're willing to lose to see if this works out, because you cannot be 100%.
Dude, Derek, you said that perfect. None of this is 100%. And honestly, it doesn't need to be. It really doesn't, right? So
Nope.
we all know if you start trading and you trade with proper size and you keep your stops short, you are controlling yourself, right? So in the Discord lately, I've been stressing a lot about accountability, right? And that's exactly what you, Darren, just said, right? And what that is basically building your conviction and your confidence. Now, you can listen to every trade I take or anybody takes and make money, right? But if you cannot learn to identify this in live time, you're always going to be a step behind, right? And, the goal here is obviously, because I don't mind calling out the trades. I love it, but I want all of you to be able to fish, right? I want all of you to be able to scalp these, see these, and understand what's going on. And once you do, it's going to change your mentality and your perception, right? And once your perception changes, you can then control your behaviors. And that is when you are unstoppable as a trader. Because that once you control your behaviors, the market has nothing on you. Nothing, right? Because if you go, hey, I'm going short here, and buyers come in and you stop out, so what? On to the next, right? But if you cannot let go of that trade, it's going to take all your money. The market is a very unstructured environment, right? And we think we like that, right? Because it's freedom, right? We can control it, but we're not used to being able to control or not be able to control, or we're not used to having that freedom. So that's where the trading errors come in. We're not used to being able to let go, stuff like that. And no, that was perfectly put, Darren. You got to put risk on the table. You got to build your convictions, right? That's why we post these in team metrics, right? We log every single supply, demand, end of day, VWAP rejection, so that we could build conviction and monthly probability win ratios, so that we understand the overall context and market conditions, right? So super powerful stuff, man. Guys, this has been really good. I'm really pleased with how this came out. This was a really good weekly recap. Absolutely loved it.
Yeah, and look at the zones that like in your pre-market analysis that you post. Your zones are all there.
Yes.
So I encourage everyone to just take those zones, draw them on your chart, and then go back and look where they come from. And
exactly.
And sometimes it's going to make sense, sometimes it's not. But I mean,
that's all right.
Like I trust your analysis, and
right.
And sometimes I change it up a little bit, But just look at the pre-market analysis, put the zone on there, go back, see where it came from, and then see how price acts around that zone, and you'll start updating your beliefs about these zones. And if you find that it works best for you to draw them next to specific candles, go ahead and do that. As long as you're confident in where the zones are, that's all that matters.
Yep.
Yeah, a lot of what helps me, I'll before I pull up the Discord and look at Josh's zones, I try to do it myself, and then I pull it up and see how close I am.
Nice.
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 Yeah. I'm trying to work on it.
Absolutely, man. And that's what it's all about, because what you're doing, and whether or not our zones are to the T or not, remember, doesn't matter. What matters is we're looking to identify nothing other than an area of value where we're looking for smart money to show up. You know what I mean? So, that's awesome, guys. Listen, man. Listen, guys, thank you all for showing. This has been very good. Listen, thank you for all the input, all the content, right? Going forward this week, right? I got a couple goals for us, right? I just really want all of us to really focus on only taking trades in our areas of value, right? Do not act on a whim. Do not catch FOMO, right? And if you miss the trade, right, because it's really hard, right? Like right here, calling a trade out like this and throwing it in the Discord, it's like it takes 2 split seconds for buyers to come in, right? So say you miss a move, right? That's okay. That's completely fine, right? Don't chase it. There's market's going to present itself opportunities, and there should be no large losers ever, right? I never want to see no 50% losses. If you're entering a trade, have a predefined stop, entry, and target, and just focus on identifying your edge. And this is going to be a really good year. I absolutely love it.
And massive shout out to everyone who paid for the Discord and paid for the course.
Yeah.
You guys are the real ones.
Yeah.
Everyone else is sitting in the welcome, and they're not. They might see this. They might see this video.
Right.
But you guys are the real ones. And if anybody has not taken the course, I highly recommend it.
Yeah.
Massive amounts of value.
Yeah.
Get a notebook and take notes. You're gonna have to watch these videos multiple times because it's absolutely jam-packed full of gems, and I'm going to go back and read it again.
And we're going to continuously put videos in it because I truly believe in just sharpening your edge over time and over time, right? So that pretty much wraps it up, everyone. Listen, we're going to post this in the weekly recaps, right? I hope everybody has enjoyed this, right? Feel free to message me anytime you want, right? That's what we're here for, and let's crush it. So I will see you guys on Monday.
All right, see you guys next week.